So you want to trade the forex market. There are so many people who jumped into the forex market because they have been told that they can make a whole lot of money trading forex. But I was one of those people. But there are things I wish I knew before I opened a live account. And today I want to share 7 points with you of things I wish I knew before I opened my live account. One, trading the forex market is a risk. A whole lot of people end up blowing their accounts under 5 days. And they only thought of how much they were going to earn. I never thought of how much they were going to risk. So it is believed by statistics, it is believed that 70 to 80% of those who went into forex trading end up losing their money. So before you start, don't just be part of the statistics. Take your time to learn how to trade forex properly. So forex is a risk. Most people have lost so much that they can never recover that money. In fact, most of those people quit before they even learn how to trade forex. When I started out newly, after finishing for the School of Physiology on babypips.com, I believe that I've known it all. After all, I've learned how to use all the indicators for a market environment, so many things that were taught over there. So I came with so much confidence. The money I saved from my first job, I used it to open a life account, and I ended up blowing my account under 5 days. After that, I became depressed and I went back, saved more money, opened a different account with a different broker. I ended up losing that money again under a week until I took my time to learn from my mistakes. So quickly, another point I want to share with you again is that manage your expectation. When I came into Forex, I believe that I'm going to solve all my financial situation trading Forex with just $2,000. I funded my account with $2,000 and I was buying on a standard account, I was buying one full lot. Sometimes I'll enter twice for just a $2,000 account. I was thinking of how much I was going to make. Imagine somebody with $2,000 thinking of turning that $2,000 into $50,000 under a month. So my expectation was unrealistic. I had an unrealistic expectation. There is nothing wrong in having a big goal, but it's unrealistic. I- How can I turn just a 2,000 account into a $50,000 account under a month? If it is that easy, if it is that easy, everybody will be a billionaire by now. So when you are coming into Forex, have a realistic expectation and not an unrealistic expectation. You cannot open an account with just $100 and are expecting yourself to be making like $2,000, $3,000 under a month. Yes, it is easy to make money in Forex, but it is much more easier to lose your money trading Forex. So don't quit your job thinking that, oh, because I'm going to trade forex, I'm going to be earning my living from it. Don't use your rent to fund your forex account. At the same time, don't borrow money from anyone to fund your forex account. Start with what you have, your spare money, money that you can afford to lose, money that will not keep you under pressure. But because pressure also works negatively in your forex performance. It acts negatively. It impacts your forex performance. When you are worried over the money you have, how if you lose it, how it's going to affect you, then it will affect your forex performance. So manage your expectation. You must be patient. If you want to trade the forex market, you must be patient. You cannot go jumping after trades, running after price, running from one point to the other because you want to be in a market. You must be patient and allow price to come to you. Chasing after price is one of the wrong way to trade. You cannot be going to a forex forum or wherever someone is posting a signal and they say buy and you run off buying without knowing what is actually happening. You have to do your due diligence, be patient. You may think that you are not a patient someone. If you are not, then it's a virtue you must learn. You cannot trade the forex market without it. You cannot go to a page and say, okay, let's buy. And you say, because they are buying, oh, I don't want to be left out, let me buy too. Or because you think this person is a forex guru, the person have said, oh, because he is buying or she is buying, and you end up buying. You must be patient, know the system you are trading, know when you have the edge. If the edge is not there, then there is no need of you entering the market. You must be patient. I cannot overemphasize this. You must be patient. Another point I quickly want to talk about is risk to reward ratio. No matter what system you are trading, if your risk to reward ratio is less than 2, then that system is not worth it. Because in forex, let's for let me give you an instance. If you are in 3 trades and your risk to reward ratio is 3, if you end up losing 2 trades and winning 1, if your risk to reward is 1:3, then you still end up, if you lose this 2 and win 1, then you still end up profitable. At least you will not lose anything. So risk to reward ratio is vital. Before you enter a trade, you should know your entry. You should also know your exit. Another thing that you must know again is how much are you going to lose if this trade goes against you, and how much you are willing to accept as a loss. So you place your stop loss wherever that point is. Then you also measure your target. From there, you can calculate your risk to reward ratio. So it's something that you must know before you enter a trade. It's not after you've entered a trade, then you start adjusting your target or your stop loss. Trading forex is a process. For you to become profitable trading forex, it's a process. It's a marathon, it's not a race. It's not something you just start and you end up winning. It's a marathon. It's something that it takes time. When you lose a trade, you learn from it. When you win, you learn from it. So those are the process. Your focus shouldn't be on how much you are making at the moment, because it builds, is a compound interest. When you win today, it adds up to what you have in your account. When you lose, it gets deducted. So it's a process. There should be a curve. There should be a curve. Your earning curve should be something like this. Sometimes it dips, but it should always be heading up. So it's a process, and you have to learn, whether be it a win or a loss. You don't, if you lose a trade, you don't go back with the intention of going into the trade to recover what you've lost. That is called revenge trading. When you do that, you are going to lose more because you are going to risk more to recover what you are doing. And a point will will come. If you keep doing that, when you lose a trade and you jump back with the intention of recovering that money or winning that money back, which is the revenge trading, you end up betting the farm. When you bet the farm is when you risk all or nothing. That mentality shouldn't follow you into forex trading because it is not good for your trading health. Should you have waited if you are in a bullish market, if a support is properly formed, or in a bearish market, if resistance is properly formed before you enter the market? Or did you wait for a retest? So you analyze your trade, be it a win or a loss, and try to know what was actually wrong or right. Because habit is something that you can't easily change. So you learn to get rid of the bad habit and you keep on with a good habit. And you learn all this with patience. So if you notice that your entry was quite aggressive, the next time you wait to be less aggressive. So from there you fine tune your trading. You don't just start with a system and you stick to it that way. You take your time, you fine tune it until it works best for you. That is when you can say you are now profitable because the system gives you a win. It gives you wins. You are staking in the reward, and that comes with time. You don't just start and know everything. Even if you've been in it for 100 years, you will never know everything. The market keeps changing. During the coronavirus, it was a different market environment. During the US election that just took place on 5th November, the market was crazy. So you learn every day. When a major news comes out, you learn from it. You learn to abstain. If you don't know what to do when the news is out and the market is raging like a storm, you stay out of it. Another point I want to talk about quickly is price action. You've not heard this before? Price action is key. All my trades are based on price action. Yes, I don't always get it right, but most times I do. You don't need to go and bother yourself with so many indicators, RSI, MACDA, simple moving average, whatever it may be. When I first started trading, if you look at my chart, you will see so many indicators on it. It ends up most time confusing me because I don't know which to follow. When you are following one, the other one is saying something else, and you end up confused. But as time goes on, after blowing my accounts like 2, 3 times, I removed everything and I started following price actions. If you followed price action, you know you are seeing everything. You don't need to wait for any lagging indicator to tell you when to enter a trade. So try to learn price action. I'm not saying you shouldn't use indicators. If it works for you, good, use it. But what I'm saying is, if you follow price action, your trade will be more profitable. So price action is key. Learn how to use price action. Learn how to use the Japanese candlesticks. Another thing I want you to know is that there is always another day. You must not always be in a trade. Be patient. If you open your chart and you can't see any opportunity to trade your system, the best thing for you to do is to stay out of the market and wait until you've seen an opportunity. Because if you don't stay out of the market, if you keep staring at the chart, you may end up seeing something that may interest you. And when you enter that trade, most times it ends up in a loss. So staying out staying out of the market in itself is also a trade. It helps you to preserve your capital because capital preservation is key. If you don't find an opportunity today, tomorrow is another day. So do your due diligence, follow your system, check your risk to reward ratio. So these are the points that I feel like sharing with you. There are more, but I would like to stop here. So if you like this video, please give it a thumbs up. I want to know things you thought you ought to have known before you started trading. So please head to the comment section and share your experience with us. Please subscribe to this channel and turn on notification so that when next I share a video, you'll be the first to know. Thanks for watching.